Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. The recession of 2023 is here. At least it's supposed to be here by now because Wall Street has been telling us that there is a recession around the corner, and it's been 18 months. I ain't seen no recession yet, and the stock market is up. What is going on? So in today's video, we need to discuss what is going on with the quote-unquote recession. Will there be one? What are the odds of a recession actually coming this year? And also, and perhaps more importantly, what should you do to prepare? Because you want to prepare for a recession before a recession happens. You don't want to get your portfolio together and panic in the middle of a recession. It's too late. It's just like Noah building the ark. You don't build the ark when it's raining. You do it when it's sunny before the storm comes. So we are going to discuss all of that today. Now, the first thing you need to know is Goldman Sachs pulled what they call a consensus estimate. Basically, they asked everybody else in the room, what do you think is going to happen in 2023? What are the odds of recession? They say 65%. And everybody else on Wall Street says 65% chance of a recession in 2023. Goldman Sachs said, we think it's 35%. So anywhere between 65% and 35% of a recession this year. It's already April. We are coming up on 25% of the year being over with, and that's not conclusive enough for me. Actually, more than 25% at this point in time. Okay, we only got but so much of the year left, and not that I'm rooting for a recession because I don't want it, but right now it's fine. It's relatively fine, I'll say that. But here's the other thing. 8 out of the last 12 recessions, the stock market has actually been up. Okay, 8 out of the last 12 with the median return, that's the return right in the middle, of 6%. So just because there could be a recession this year doesn't necessarily mean that the stock market is going to crash or that everything is going to fall apart. In fact, previous history will show you that things are going to be fine from a stock market perspective. Even in the last recession, I say this all the time, it was just 3 years ago, in 2020, the stock market actually ended positive at the end of the year. There was a recession, we came out of it. During that time, the stock market was up, and I told you guys about a week ago now that there was a stat out there that the year before a recession is usually worse than the year of the recession. We know that last year, the stock market was down close to 20%. That was, if this is going to be a recession year, this is likely going to be much better than what we saw in 2022. Now, you got all the stats and stuff out there. What should you do now as an investor? Because we don't know if there's one, but again, if you're going to prepare for a recession, do you want to do that before the recession or do you want to do it in the recession? I think before the recession is the correct answer here. Here's what you need to do now to prepare for it, okay? Number 1, do nothing. Do nothing. Don't change your 401k plan. If a recession hits, don't withdraw everything. Don't stop contributing. That is actually some of the worst things you can do. And you can ask people who did that in 2020 how they worked out for them. Generally, if the stock market falls, and especially if you're buying index funds, which most of us should be doing, this is an opportunity for you to buy more. Those who were buying stocks like Nvidia last year, you're looking real nice right now, aren't you? Those who were buying tech stocks or anything back in 2020, back the last time we had a recession, are doing quite well right now. So it's never a time for panic. You should stay the course. If you are investing 15% of your salary, and hopefully you can retain your job because there are a lot of layoffs going on out there, but if that's the case, continue investing that 15%. Do not change and do not deviate from that plan just because the environment is changing. That is not a time for you to do anything. In fact, if you were to do anything to prepare for a recession, in my view, I'm going to keep investing my 15%. If the market were to start to fall, I might kick that up to like 16 or 17% because history has shown us that over time, the stock market does repair itself. In fact, 82% of the time, 2 years after a recession, the stock market is positive. 82% of the time. I might have to take that, right? I might have to take that, increase my contributions just a little bit more and continue investing. But what you don't want to do, the biggest mistake that you can make is withdrawing and stop contributing and say, hey, look, I want to sell everything and go all cash. I want to sell everything and go all to bonds and really kind of hide in the corner. And the reason why is because you don't know when the stock market is going to turn around, and you're not going to be able to pick the perfect time to sell and then get right back in and avoid what could be a major storm. You didn't see it in 2020. I didn't see it in 2020. I didn't see it in 2022 or 2023 for that matter. If you ask me, I'm pretty sure there's a video out there at the very beginning of 22. I thought that year was going to be positive. Yeah, it wasn't that at all. But hey, I continued investing. Y'all saw me do so on public and every other platform. The plan did not change. And a lot of those investments from last year are starting to pay off or are continuing to pay off to this day. But it's only because I stayed on the path. I didn't quit. I didn't leave. I didn't go hide. I continued doing exactly what I say I'd be doing, right? Dollar cost averaging, investing in the companies that I researched and believed in. And obviously a lot of that money has gone to index funds. That is the best way to prepare, is to stay on the path. Now I've got to emphasize this because one day there will be a recession. I don't know if it's going to be 22. I don't know if it's going to be 24, 25, 26, 27, all the way up to whenever. Recessions do happen. It is a normal part of a regular functioning economy, with the exception of Australia. Go Google the last time Australia had a recession. But just throw that out there as an econ nerd. But here in the US, in most parts of the globe, there is a cycle every 10 years or so. So whether it's now, whether it's 10 years from now, or anywhere in between, you are going to need this advice to stay the course. So it's usually some of the best buying opportunities. There may not be another time in the near future, and hopefully it's not, but you may not get a 20% discount in the stock market like we saw last year. Imagine buying good quality companies and index funds and all that stuff 20% cheaper and watching it rise over time. That was 2022. You don't know when you're going to get the opportunity again. This is why you want to stay on the path, because I didn't expect it to happen. I still don't know what's going to happen in 2023. And because you don't know, you should be investing all the time. And that's what we talk about when we talk about dollar cost averaging. So those are your plans. That is what you need to do. Stay the course, continue investing. And if the stock market just happens to fall, you should be investing even more. All right, that is it for me today. News and announcements, like always. Make sure that you are in the book club. I think we added like 3 or 4 members to the book club. I should be sending an email out here. I mean, based on my schedule, probably Thursday, anywhere between Thursday to Sunday. I'm gonna send an email, just kind of get everybody on the same page, let y'all kind of give y'all a schedule and a location, probably on Zoom. So you should be looking out for that if you're inside the book club. That link should be below. Also, as you know, nominated for the MAIA Award for Personal Financial Influencer, Best Personal Finance Influencer. So feel free to vote if you have not voted before. It is free to vote. That link is also below. And then lastly, our members only, you definitely want to join that. We do exclusive videos each and every week. This week, I'm going to break down what we called a discounted cash flow model, which helps me to break down the exact price that I like to buy specific companies. So you can really just plug in anything you want or anything you need for the company you're looking for, and it'll spit out, say, hey, look, you should buy this company at X price, which helps you determine what is overvalued and what is undervalued. Now, we're going to go through the math of that this week, and then I'm also going to put out a list of some of the top 5 to 10 stocks I think are undervalued, stocks you might want to consider, and then we'll also put out a list of things that are overvalued that you might want to avoid and wait for a recession to consider buying. So you definitely want to check that out. But it's only going to be in the members only. So, you know, that link is also in the description below. All right, that is it for me. I will talk to y'all later.